Are you interested in investing in stocks but think you need a lot of money to get started?
Think again.
Investing in stocks with little money is absolutely possible, and in this video, we'll explore the ways you can start building your portfolio even with limited funds. From understanding the basics of stock market investing to finding the right brokerage account and making smart investment decisions, we'll cover it all. Whether you're a complete beginner or just looking to expand your investment knowledge, this video is for you. So, if you're ready to take control of your financial future and start investing in stocks with little money, keep watching to learn more. Did you know that you can start investing in stocks with as little as $5? Many investment platforms offer fractional shares, allowing you to buy a small portion of a stock instead of a full share. This makes it possible to own shares of big companies without needing a large budget. Commission-free trading apps have made investing more accessible than ever. You can invest in exchange-traded funds, which provide instant diversification by holding multiple stocks in one fund. Dividend reinvestment plans help your investment grow over time by automatically reinvesting your earnings into more shares. Starting small and investing consistently can lead to significant long-term growth. With the right strategy, research, and patience, even a small amount can turn into a solid investment portfolio. Many people believe that you need a large amount of money to start investing in stocks, which can be discouraging. The idea of needing hundreds or thousands of dollars to get started often holds people back from taking the first step. However, this is no longer the case. With the rise of fractional shares and commission-free trading, it's possible to start investing with just a few dollars. You no longer need to buy a full share of a stock, making it more affordable to invest in big companies. Platforms also offer ETFs, which allow you to diversify even with a small amount of money. This makes it easier for anyone to start building a portfolio, no matter their budget. By starting small and staying consistent, anyone can begin their investing journey, and over time, even modest investments can grow significantly. Investing in stocks with little money is absolutely possible. Many platforms today allow fractional share investing, meaning you can buy a portion of a stock instead of a whole share. This makes it easier to start with just a few dollars. Commission-free trading apps have removed barriers, making investing accessible to everyone. Exchange-traded funds provide another great option as they allow diversification even with a small amount of money. Instead of buying individual stocks, you can invest in a fund that tracks the market or a specific sector. Dividend reinvestment plans help grow your investment over time by automatically reinvesting dividends into more shares. When it comes to investing with a small budget, various platforms make it easy for beginners to get started. Many brokerage apps, like Robinhood, M1 Finance, and Webull, offer commission-free trading. Buy and sell stocks without incurring high fees. These platforms also enable fractional share investing, a concept that has made investing more accessible. With fractional shares, you can invest in expensive stocks like Tesla or Amazon without needing to buy an entire share. Instead, you can purchase a fraction of the stock based on how much money you have. For example, with just $5, you could own a portion of a share rather than being excluded from investing in big-name companies due to their high price. Low-cost index funds are another great way to invest with a small budget. These funds track the performance of an entire market index, such as the S&P 500, and offer built-in diversification. Instead of picking individual stocks, you're investing in a broad range of companies, which reduces the risk. Many platforms, like Vanguard and Fidelity, offer low-cost index funds with no minimum investment, allowing you to start investing with as little as a few dollars. Together, fractional shares and low-cost index funds make it easy to begin investing without a large initial investment. By using these tools, anyone can start building a diversified portfolio even with limited funds. Finding the right brokerage account and making smart investment decisions is crucial for success in the stock market. When choosing a brokerage account, consider factors like fees, ease of use, customer support, and available investment options. Platforms like Robinhood, E-Trade, and Fidelity offer low-cost or commission-free trading, making them popular for beginner investors. Smart investment decisions start with understanding your financial goals and risk tolerance. Diversifying your portfolio across different assets, such as stocks, bonds, and index funds, can reduce risk while maximizing growth potential. Researching the companies or funds you're interested in, staying informed about market trends, and making investments with a long-term mindset are also key strategies. Remember, investing isn't about quick wins but rather steady, disciplined growth over time. Starting with small, consistent contributions, reinvesting dividends. Adjusting your portfolio as needed can help you stay on track toward reaching your financial goals. The key insight is that investing with little money can lead to significant long-term gains if done wisely. Real-life examples demonstrate how small, consistent investments can grow into substantial wealth over time. Take the case of someone starting with just $50 per month in a diversified index fund like the S&P 500. Over the course of 30 years, assuming an average annual return of around 7%, that $50 a month could grow into nearly $50,000. This illustrates how even modest amounts, when invested regularly, can take advantage of compound interest and generate meaningful returns. Another example is the story of early investors in companies like Apple or Amazon. If you had invested just $100 in Apple stock in 2000, when it was relatively low, that investment would be worth thousands of dollars today. Similarly, Amazon's stock price in the late 90s was affordable to small investors, and those who saw the company's potential early reaped massive rewards. These examples show that consistent, small investments, whether in stocks, index funds, or fractional shares, can lead to significant wealth over time. The power of compounding, along with the ability to buy into major companies with small amounts of money, makes investing a viable strategy for anyone, regardless of their starting point. Here's a real-life case study of an individual who invested small amounts over time and saw impressive growth. Meet Jane, a young professional who began her investment journey in 2015. At the time, she had a modest income and wanted to start investing but had only $100 to spare each month. Jane decided to invest in a diversified index fund that tracked the S&P 500, which she knew offered broad exposure to large, established companies and typically yielded steady returns over the long term. For the next 5 years, Jane committed to investing $100 each month. By 2020, her portfolio had grown significantly. She made a one-time big investment, but because she stayed consistent and allowed her investments to compound over time. The S&P 500 delivered an average annual return of around 7% during this period, and by the end of 2020, her $6,000 investment had grown to about $8,600, giving her a return of roughly 40%. Jane continued investing, increasing her monthly contribution as her income grew. By the time she reached 10 years of consistent investing, her portfolio was valued at approximately $17,000, having started with just $1,200 in total investments. Her story highlights the power of compounding, diversification, and staying committed to regular, small contributions over time. This case study is a testament to the fact that even with a modest starting point, investing small amounts consistently can lead to significant long-term gains. By sticking with it, Jane leveraged both market growth and the compounding effect, turning a small initial investment into substantial wealth. In summary, investing in stocks with little money is not only possible but can be a smart financial move if approached correctly. With tools like fractional shares and low-cost index funds, even small investments can grow over time. Platforms that offer commission-free trading have made it easier than ever to get started. The power of compound interest allows those small contributions to add up. By staying consistent, being patient, and making informed choices, you can build wealth over time, even starting with just a few dollars. Consistency is key, and small, regular investments can build significant wealth over time. Investing with little money requires patience, research, and a long-term mindset. By focusing on strong companies or diversified funds and reinvesting earnings, you can steadily grow your portfolio. If you found this information helpful, be sure to check out my other videos on smart investing strategies and share your thoughts in the comments. I'd love to hear your feedback and any questions you might have. Don't forget to like, subscribe, and hit the notification bell for more tips on making the most of your investments.